everyone, it's Insurance Shar here with your weekly Wednesday tip. A lot of questions lately about why are my insurance premiums continuing to go up even though my car's getting older. Well, number one, insurance is a lot about damages to other people, not necessarily all of the value in your own car, although that is a factor as well. Number one, every insurance company across the board is having this struggle right now because more and more people are filing claims, and those claims are happening more and more often, and they're much bigger than ever before. Almost all insurance companies have paid more in claims than they have gotten in premiums over the last year or two. But here's what you can do about it. Number one, do not just pay a ticket. If you get a ticket, make sure that you are going to traffic school if you are eligible, or if you get a ticket, talk to your insurance agent and find out what your options are, because if you just pay it, you're basically admitting fault, and that's going to count against your record, and it's absolutely going to affect your insurance premiums. Number two, when shopping for insurance, make sure that you are comparing apples to apples. For example, if you have $100,000 per person and $300,000 per accident on your insurance, that's different at different companies, even though the numbers are the same. For example, you could be getting coverage for people in your car on the liability coverage at one company, but it only covers people in other cars at another company. So even though the numbers are the same, the coverage is actually different. So make sure you're checking that out. Number three, don't change insurance companies every couple of months. If you do, basically that looks negatively on your insurance report. Believe it or not, insurance companies have to show this information of who the policy was with, last month or the month before or 6 months before or a year before. Insurance companies report this information so it's readily available to all insurance companies. If you're switching every couple of months, it's almost like you're shopping around for a new credit card every couple of months, and it's affecting your insurance score, and that could be driving up your insurance rates. Number four, driving pattern monitoring. A lot of companies are offering this today, and it's a really good tool so that you can be in more control of your insurance. A lot of times it's looking for things like, what time of day are you driving? How many miles a year are you driving? How do you corner? How do you speed up? How do you brake? And the number, again, of miles you're driving per year. So make sure that if a company is offering this tool, that you're utilizing it, because it allows insurance companies to charge you based on your insurance patterns or your driving patterns versus how everybody else in your age, in your area are driving. Sometimes you could just be lucky and you don't happen to have any tickets. Doesn't mean you're a good driver, just means you've been lucky. This tool allows insurance companies to rate you based on your driving patterns and not everybody else in your area and in your age bracket. Number five, always make sure make your payments, insurance payments on time. Again, insurance is a lot like credit. If you make your payments late or let your policy lapse, or make your payments, after the policy is lapsed and bring it current again, that counts kind of like a late on your credit report, and that negatively impacts your insurance rates. So make sure you're always paying your payments on time and never, ever, ever go past your due date if you can avoid it. Number six, state limit insurance is the most expensive. You will be paying more per thousand for those low insurance coverages, and that's negative. So you could be paying, say, $10 per thousand for your auto insurance if you're going with the state minimum requirements. Whereas if you got 100,000 or 300,000 or 500,000, you're going to be paying, $1 or $2 per thousand. So actually those higher coverages are more effective for the cost per thousand. So look at increasing your insurance coverages. Number seven, bundle, bundle, bundle. Anytime you get just a standard auto policy all by itself, you're going to be paying more. So if you can get some insurance that's a renter's policy, a homeowner's policy, a life insurance policy, a health insurance policy, anything you can get to bundle your insurances, the lower cost that insurance is going to become. Number eight, think before filing a claim. Even those little piddly claims like towing or a lot of glass claims, or especially claims that are below your deductible, they're still counted as a loss even though your insurance company doesn't pay out. So always talk to your insurance agent before filing a claim. Number 9, track your mileage. A lot of insurance companies charge less the less you're on the road, but if you're not accurate and you lie or fudge the numbers a little bit and say you're driving less than you really are, that discount is just going to fall off later and you're going to be upset when your insurance premiums go up. So make sure you're tracking your mileage. Contact your insurance company and ask them what's your low mileage cutoff and try and stay below that number so that way your insurance premiums can go down. And last but not least, keep your car for longer. The longer you keep your car, the better your insurance premiums get, because most people have accidents within the first couple of years of owning their car simply because you're not familiar with it. But if you've owned your car for 5, 6, 7, 10 years, your insurance premiums are going to be less simply because you are familiar with the nuances of that vehicle. Well, I hope that was helpful to you. There's not a lot you can do when it comes to insurance premiums and stopping them from going up, but these tools will definitely give you some control on how much your insurance premiums will go up. Well, I hope you found that helpful. Stay tuned next week. Goodbye for now.